Peace, peace, peace. It's Wealth Wednesdays. Wealthy Wednesdays. Ooh la la. I like it, right? I like it. I like it. Bring it on. Bring it on. Sorry, guys. I love this thing. No, it's me. Okay, I understand. Wealthy Wednesdays, man. Want to talk a little bit here. Let's talk about how we could take advantage of some of the products out here, right? IULs. Well, fun fact: IULs didn't really hit the scene until 1997. Other products came before that, like the UL and uh, the variable life insurance product. Um, and it really didn't really boom until like I would say 2014. By then, it was not that many companies. Now it's many companies that's offering the product, and I actually have one. My kids have one, but we have other products as well. This is not the only product we have. I definitely believe it's all about suitability, based on your situation. Now, if you want to be totally honest, a whole life participating in the policy, in my strong opinion, is way better than any other life insurance policy out there. Now, there's some things you have to go to get approved. And, now that I'm in the space, I learned a whole lot, man. And, my first time understanding about cash value life insurance was in 2017 when I first uh, read the book by I think it's Antoine or something like that, and it's called The Banker's Code. And at that time, I had term life insurance. You guys, I didn't. I was feeling salty. I was like, well, where did I get this? Why wasn't I sold this product? Nobody that I knew sold the product. You don't see any commercials on cash value life insurance. You hear term all the time. You hear the traditional whole life insurance all the time. But there's no pre-COVID, there was no true advertising on these products at all, at all. So it's good to be in the space of this information. I would say regarding the IUL, it's it's great for kids. Good for kids. I mean, kids have more time to deal with the ups and downs of the market versus you and I, right? Uh, in life insurance, I'm considered mid age, right? Um, I'm 35. Thank you. I don't look like it. I know. Thank you. Thank you. No, but seriously, they start to frown more upon you. That uninsurable age. Not really say uninsurable, but the age they were looking like, it's getting harder and harder for you. When you get to the closer to age 76, it looks worse and worse. The closer you get to 76, you guys, the closer you get to that age, the worse it's going to be for you. So it's the reason why I say get it while you're healthy. Get it while you're young. And look, health isn't the only thing that they look at. So get it out your head that I'm going to always be healthy. You might get a suspended license. That will deny you in life insurance. Maybe not all, but the products that you really want to use to be, maybe have some future liquidity going on or some accumulation of cash value and growth, it can rate you differently. It can affect your entire rating by having a suspended license. Why? Because now you're a risk. You go on the road, they see that you're very risky, right? It's like your credit report, your DMV report, just like your credit report. They're looking at that. Your BNB report, whatever you call it in your region. They're definitely looking at it. They're looking at your credit too. They're definitely looking at your credit. It's suitability. What are you like when it comes to your debts? Are you honest? right? Do you have too much debt? They look at that. They look at your criminal history. They look at all of that. So when I say get life insurance, I'm not saying because alone that, oh, because you're in great health. Hell, you may, God forbid, you may end up in a situation you do get a record. You may end up in a situation your license do get suspended. Your license gets suspended for a day with life insurance. I mean, with auto insurance. That one day can affect your premium or your rating with a life insurance policy. Just by having that one day suspension on your BMV or your DMV report, having bankruptcies, being a felon, certain misdemeanors, those will affect your ability to get life insurance, especially cash value life insurance. IULs is not as strict as the whole life participating policies. However, the rules apply regardless. One reason why I say get it now while you can't get it while you're young. The younger you get it, when you're older, you're going to be thankful because you're not paying the rate that someone would have to pay, you know, at that current age. So say you got it at 21 and you're 36 now. Just imagine your premium compared to someone who got it at 36. Imagine the cash value that have accumulated over that time. If I would have known this years ago, when I first had my term policy at no, I think it was 24, 25 when I got it. And because I got rid of it at like 30, 29, 30 years old. When I found out about these policies, I got rid of my term. It did increase every year. It wasn't a lot, you guys. And I didn't get anything back from it. Me, I don't think I'm going to die in 30 years. So I will only use term as a buffer, right? To buff my death benefit, to make it look better. I wouldn't use it beyond that in my situation, or maybe a mortgage protection. I got a mortgage that I want to protect, and I have a death benefit of another life insurance policy, but I know I have a home with a mortgage on it, in which typically those type of debts I do pass on to my children. So I will get a term life insurance or term RPO, depending on your situation, suitability, will determine the type of term I would get. Or I might get a term that is actually built inside of my whole life policy as a rider. We can add term policies as riders to a whole life insurance policy. So it will give you a larger amount in death benefit between of 10 to 30 years for that time frame and still guarantee you life insurance for the rest of your life versus having just a term policy. And after that term is up, you get $0.00. Well, I can convert it to a whole life policy. Yes, you can convert it. Got to convert it before it expires, of course. And if you have the option to convert, you're not getting any of that money back. That money you put into that policy for that 30, 20 years, you're not getting any of that money back. It's not going towards your new policy. This is not to scare you from term. This is just kind of give you some basics of what really goes on in the life insurance arena. IUL is based on the market. Well, zero is your hero, they say, right? I agree. Zero is your hero. However, even though you say market went bad and you didn't average anything for the year, we still have to pay fees in these products. So though you didn't make any money, you still can lose money. Not due to the market, but fees to administrate the policy. Whole life, not as much. Whole life doesn't cost as much to administrate than an IUL. Whole life participating, in particular, example Lafayette, they can charge anywhere between $120, $130 a year. IULs, talking about 3%, 4%, 5%, 6% spreads. It just depends on the company and the product that determine the spread. If you want to compare it to a investment, I would definitely compare it to a 401k. If I am going to compare it to any form of investment, though insurance is not investments, I will compare it to a 401k. It operates like a 401k, just without the taxes and the penalties for withdrawals. And you have a floor. 401ks, you have no floor. You have penalties for early withdrawals, and you are taxed on a 401k. Now we can talk about the Roth IRAs. Um, they're limited in the amounts you can make of up to 7,500 deposit every year. I believe it is. You you can't make over a certain amount to qualify for one. Of course, it's after tax dollars, which is good. Um, there's still, I believe, fees associated with a Roth. Let me triple check. IRA's fees can include maintenance fees of $25 to $75 annually. Let's see here. See, so yeah, they have transaction fees, mutual fund expense ratio fees, advisory fees. Mm-hmm. Let's see about penalties. We see the fees. Let's talk about the penalties here. You still have a 10% penalty for early withdrawals with a Roth. The 5-year rule means you must hold the Roth IRA for at least 5 years from the year you first contributed to it to avoid penalties on earnings withdrawals. Okay. Earnings. If you withdraw earnings before age 59 and a half and or before 5 years holding period, they may be subject to a tax and a 10% penalty. Yeah, this is good something to know about the Roths, right? I mean, I should have known that and studied it so much. So much stuff to know, you guys. Sometimes my brain gets, and it's pretty early over here, so haven't had my mojo. Just had to do it. I just had to do it. Yeah, but yeah, um, so yeah, the if I were to compare an IUL to anything, it'd definitely be a 401k. Definitely. I don't really recommend participating in 401ks because the IRS is called your silent partner. The IRS knows what you would have to pay in taxes before you do. Congress gets to decide what you'll have to pay in taxes before you do. You don't have no say so. They do. You don't know what tax is going to be when you turn 59 and a half. You don't. You're actually rolling the dice. And I will also say that in a 401k, you are losing most of your investment due to compounding fees that the fund is charging you every year. I don't care if it's 1.5%. That compounding over time can eat away at a portfolio. Shout out to Tony Robbins. I read a lot of his books, and he has some information in there that was very shocking. He shows some data of how 70% of people's portfolios is truly wiped out in compounding fees in these retirement accounts. Just off of fees. This doesn't even consider market effects. Speaking of markets, 2008, 52% of Americans, I believe it was, lost most of, if not all, their portfolios due to the market crash. You're putting your life in someone else's hands. With life insurance, you get to control it. Whole life in particular, I would say. IULs too. But if I'm going to participate in something like that, because with the 401ks, the job they typically get you with the matching. Oh, we're going to match you. Now, I understand you're losing a lot of your match money anyway, and the fees and et cetera that goes along with that. This is not to, you know, uh, tell you not to. I'm just giving you my opinion, strong opinion of what I wouldn't do if I were you. I would not participate in 401k. Just wouldn't. It's not worth it. Not today's time, not today's market. Definitely not worth it at all. But hey, to each his own. If you have it already, cool. I do get more detailed on the limit that you should want to invest into your 401k. So by the time you get to the age of Social Security, and let's be honest, most of us may not even get to enjoy that, uh, but if it still exists, and we can kind of give you an idea of the amounts you should actually put into it, and which is your limit. So when it comes that time, you're not getting hit so hard because you have this big investment coming your way. So yeah, I appreciate you guys tapping in with me on Wealthy Wednesdays. I will be coming back at you with another one every week or every 2 weeks. I'm definitely going to try to do every week as much as possible. This is just the beginning stage, the testing stages for me, you guys. So I do appreciate you tapping in and enjoying this content. And if you did enjoy the content, for sure, please share it and like. I do not know how well I'm doing if you're not sharing or if you're not liking. I can't continue to give the sauce that I can be given if I'm not getting the shares and likes and follows. So please do so. Check out our podcast we got coming out with me and my wife. It's coming to you guys soon. We're going to be talking about our marriage, business, both of our business. Giving you guys some insight on how real estate works, that industry, the laws, not from a counsel standpoint, but from an educational standpoint, finances, wealth preservation, and asset protection. And of course, our relationship. How do we get it to last as long as we have been lasting? And no, it hasn't been a smooth ride. We've gotten to many situations where we were like, hey, I don't know, right? But that's what makes a relationship strong, when you go through those times and you work things out and you figure things out. You develop a maturity and a level of respect for one another that you never thought you could. So yeah, again, just be on standby for that podcast and more of this content to be delivered with some flavor in your ear. But again, I appreciate you guys tapping out. Until next time.